All right. So, buy now, pay later is a space that's had a lot of momentum pre-COVID, and it's really only accelerated since. I think that with the pandemic, a lot of merchants and customers alike are looking for alternatives to credit cards. So first, let's start with some introductions. I'm Josh. I'm a product manager here in San Francisco, focused on building local payment methods like Affirm for North America. I joined from the merchant side about a year ago, so I can certainly empathize with the breadth of choice that's in the market for buy now, pay later at the moment, and the different prioritization exercises that exist. So we're excited to chat with you today about the market itself and how maybe Adyen can help with that lift. Kiko?
Hi everyone. So really excited to be part of this session and being able to have time to discuss with you about buy now, pay later. My name is Kiko Piqueras. I'm a product manager at the local payment methods EMEA team here in Amsterdam. I've been in Adyen for 2.5 years so far, and basically my main focus has been growing the buy now, pay later proposition at Adyen on a global scale. I think what excites me more about this type of technology is the fact that it helps both shoppers and merchants. Shoppers by increasing their buying power, giving them access to products that they really want, and merchants because apart from being a payment method, buy now, pay later also offers a powerful marketing tool. I'll dive a little bit more later on the marketing tool because I think it's key concept for BNPL. We have together with us Darren from Etsy. Darren?
Hey everyone, good to see you. My name is Darren Lawler. I'm Director of Payment Operations at Etsy. I'm based out of our Dublin office in the Republic of Ireland. And my role at Etsy is look at expansion and growth opportunities on both sides of the marketplace. So that's with the buyer and with the seller. And looking forward to our discussion today about what we can talk about. Cheers.
Great, thanks guys. So here's what we're gonna get into today. First, we'll talk about buy now, pay later, how it got its start and how it's gotten traction in the market. Second, we'll get into what's in it for merchants and customers, what's the value for these two cohorts. And then finally, a look at the global space and more specifically, the main players in North America. So as you have questions throughout the presentation, feel free to drop them in the chat. Hannes will be helping to moderate those questions. We'll definitely save time at the end either to get you on audio and visual, or he can ask questions on your behalf. So quick origin story on buy now, pay later. I think from my perspective, buy now, pay later is really the perfect storm of two phenomenons. The first being the introduction of e-commerce. And so with a new way to shop, there's certainly some trepidation from the customer on shopping from home. And a delayed payment, the likes of which Klarna initiated with invoicing in Europe, that's certainly a compelling way to entice the customer to take a chance on a new way to shop, get a sense of whether or not they actually want what they're purchasing before returning it. Does it actually fit? Is it the right style? What have you? So a delayed payment can be quite compelling to try a new way to shop. The second being millennials, them coming of age after the recession and choosing how they'd like to pay when they do shop online. And they chose debit over credit in some startling numbers. And so debit is great to give access to paying card not present, but certainly because you have to have the funds available at time of purchase, you can have lower average transaction values as well as lower authorization rates, specifically because of insufficient funds. So with that, we'll get into some data. Take polls with a grain or a block of salt. But in 2017, millennials said a third of them that their greatest fear was credit card debt. And that certainly gives you an idea for why they chose debit over credit. If you look, it's even higher than dying. So that is an interesting poll. This is a 2017 credible study. And the data behind this is that there was over $1 trillion of outstanding credit card debt at the time, with an average balance over $5,000. So certainly, something that's worth being concerned about. Maybe not this concerned, but with that rational fears aside, let's get into the actual statistics. In 2014, 63% of millennials reported not having a credit card. And by 2016, that had grown to over 2/3 not having a credit card in their wallet. So certainly created a white space for buy now, pay later to play. These tenders, they offer a couple of key characteristics. They're flexible, they're trusted, and they're simple. And I think that, as Kiko alluded to, they are more than just a payment method. They really are as much of a marketing tool as they are a way to pay. So the first feature that I think spoke to consumers was the ability to have instant gratification. And I think this is something you see in younger demographics outside of just their shopping behavior for sure. So if you have made a choice not to give yourself all the time access to credit, are you willing to, for the right purchase, give yourself access to your next paycheck? They give the opportunity to share the burden. I think this is something that Peloton's done really well. They've taken, a somewhat aspirational product that is quite expensive, and through a partnership with a firm, they've made it quite comparable to a couple studio classes, and that's a monthly payment that is free financing, or that financing is borne by the merchant. They're transparent. So using a credit card, you have to keep up with how the rates may change over time, the terms, etc. But every time you're making a buy now, pay later purchase, you're going through a flow that reminds you what the cost of that finance would be if it applies, and what the terms of repayment are. And finally, rewards, which it's beginning to look a lot like credit cards, just don't call it credit. So Afterpay launched a rewards program to incentivize customers to pay often with Afterpay, which was an interesting way to curb the behavior of those using buy now, pay later. And it seems to be working. So 33% of US consumers have used a buy now, pay later service. And getting into specific demographics, 40% of millennials, 57% of Gen Xers have used a buy now, pay later service. So Kiko is going to talk us through now how buy now, pay laters are making these offerings to customers.
Cool, thanks. So Josh has walked out through how like the landscape looks like. He also showed us how what's in it for shoppers to make use of buy now, pay later. But I guess the question that comes to my mind is, okay, so how do they do that? Like, how do they make the right choice? How do they know who is accepted and who is rejected? So what's the magic behind BNPL? I guess the answer for those questions is a simple but really complex concept, is basically data. So buy now, pay later providers, let's go, next one. Data, there we are. So buy now, pay later providers basically rely on data in order to be able to make the right choice. So during the course of the transaction, they expect merchants and shoppers at the later stage to provide all the data points that they will require in order to be able to assess the risk of a particular transaction, and therefore be able to accept that transaction or be in the need of rejecting it. By data points, I think we can group in two. So we would have shopper information, being the shopper name, shipping address, and billing address, and basket information, basically what the shopper is buying in this particular transaction. So with that in mind, okay, data points are there, but what do we do with that data point? What those BNPL providers do with those data points? So the data points are used as input for the CREs, or credit risk engines, which is basically owned by the BNPLs around systems that at the end of the day will make the right decision and will decide if a transaction goes through or is rejected. What CREs always look at is basically fraud and risk. When it comes to risk, the question that has to be answered is, all right, is this transaction going to be paid, or is it going to result in an unpaid transaction? How does CRE check that? Basically, it gets or extracts the shopper information from the data points that we have passed through the transaction. It will also take some historical or potential historical transaction that particular shopper will have. It will also take similar profiles or similar models similar to that particular shopper and combine them all together with some other aspects like MCC or country behavior. And then all combined, it will create a scoring. If the scoring will be above the threshold, then the transaction will be accepted. If it's below the threshold, it will not possible to be accepted and it will be rejected. Similar to that, it comes fraud, but the question is different. So in this case, the question is this a real transaction? Is this buyer real? Is he really trying to buy this product? And another question, is the person behind the screen the same person as I have in my data? And how does it check it? It's basically the same as with risk. So it will extract the shopper information from the data points, and it will basically check the identity of that particular transaction and of that particular shopper. And same with the basket. It will extract the basket information, and it will mainly check whether that basket makes sense for that particular transaction, that particular merchant, etc., etc. So I think one example that I like to use to explain this. So basically, fraud is more likely to happen whenever a product is closer to cash. And what I mean by that is that there are certain products that are more likely to be resold in second-hand markets, for instance. Let's put a clear example, iPhones. Whereas there are other products that are less likely to be able to make a business out of it, for instance, pieces of furniture. So with that in mind, those CREs are trained, with all the data information, and basically they're able to give the right decision. What I'm going to do now is I'm going to show you, so basically we're presenting you Buy Now, Pay Later as a quite standard product, and it is actually quite standard in concept, in essence. So behind the scenes, it works pretty much similar with all providers. But of course, there are so many providers, and they all come with differences between each other. So here I'm showing you the customer experience of one of the lead providers right now in the market, Afterpay. Later, I will show you another one called Klarna, and you will see the different approaches that they have on the shopper journey, on the customer experience. As you can see while I'm talking, for Afterpay, there are several stages during the process that the shopper needs to go through and fill in certain information. So what Afterpay is aiming while doing so is basically making sure that every first transaction creates an account with Afterpay for the customer. So that is aimed to be a way to create customer retention. So Afterpay is aiming to make sure that whenever a subsequent transaction is happening and that shopper ends up in a checkout with Afterpay as an option, then they will pick that option for paying. So with that in mind, as you can see, the flow is a little bit longer, but Afterpay is securing a retention for this particular shopper. Of course, in the future, subsequent transactions with Afterpay will be shorter. And now let's go to the next one, because you will see how Klarna approaches customer experience. So you will notice that actually Klarna goal or Klarna's approach for customer experience is how to minimize the amount of clicks on the process to make sure that the funnel is shorter. So then we make sure that the conversion is higher. And this is basically what you see here. So there's only one page where all the information is presented to the shopper. He just needs to enter the information of the car details, and then he will basically be accepted. I'm not saying Klarna is not focused on customer retention. Actually, it's not that case. It's completely the other way. So Klarna has a mobile app that can be downloaded from the stores. Actually, has been on top of the downloads in the US for quite some months. And this is how they will focus the communication flow in between Klarna and their customers. So both BNPLs here have a different approach to customer experience, but trying to aim for the same aspects. Cool. So I think we've talked about the landscape. We've talked about what's in it for shoppers. We've explained a little bit how it works, and we've seen some customer experience and different approaches from different providers. But yeah, the last question is clear, right? So what's in it for merchants? Like, why is it BNPL a convenient option for a merchant? Well, as I was explaining before, these providers, Klarna and Afterpay and all the rest, have a clear strategy towards customer retention. They want shoppers to repeat paying on the payment method because, as explained on the CRE, they will be able to know the behavior of that customer, and therefore improve conversion in that sense. So as you can see here, we're mentioning that most BNPL shoppers purchase at least 4 times per year on this particular technology. There's also two figures that I like a lot to mention, and actually I think are really important, and they are really connected to the marketing tool concept that I was mentioning in my introduction. One being conversion boost, and you see some figures there, 46% conversion increase. That's pure uplift volume whenever you enable a BNPL in your checkout. And another one is ATV increase. We show here 80% plus. I've seen 100 and 120% plus in certain cases. How do we achieve those two? How do we make this happen? Well, by using it as a marketing tool. And how does a payment method become a marketing tool? Well, by providing visibility. So basically, by showing that the website is able to offer BNPL on an earlier stage of the shopper journey, then we make sure that the shopper will know that they can get the benefits of this particular technology. So I'm thinking on 2 different cases. Let's think on the case of a shopper that is sort of doubting, hesitant, just checking around if he wants to buy that particular product. So because we're showing them BNPL on an earlier stage, not only at the checkout, he will actually know that his buying power has been increased. Therefore, it could be a potential customer of our website. The second case that I'm thinking about is, okay, I know I want to buy a product, let's say a TV, but I'm not sure which TV I want. I really like this one, but actually financially it's a little bit challenging. So by showing buy now, pay later at the beginning or in an earlier stage of the product of the shopper journey, we will be able to make sure that this customer understands that their buying capabilities are way higher and that he can actually aim for the product he really wants. So I think to sum up, we can go to the next slide.
Yeah, the only thing I would add here is just your mileage will vary. This will depend on demographics. This will depend on the sort of holistic way that you build the journey. But these are some statistics that we see platform-wide, regardless of partner.
Indeed. Let's take it as an average. So moving to the next slide, I think it sums up what I'm trying to say, right? So start to finish, exposure and experience is really important to get the most out of this particular technology. I'm going to show you some examples on how best practices of different providers advise us to display their product in earlier stages of the shopper journey. So as you can see in the homepage, we can add a banner that clearly explains what you guys are offering. I like especially the product displays page, where basically most of these providers offer calculators or simulators, because this serves several purposes. So it will display, it will give visibility to the payment method, but it will also give contextualization of the payment method. If someone doesn't know Afterpay or doesn't know Klarna, then they will understand more or less what it is. And it will also give clear visibility or clear information on what will be the price on every single split, which at the end of the day will mean the shopper will be able to sort of calculate if they can aim for that product that he really wants. There's also shopping back there and checkout payment page. I think I would also like to remark that on checkout payment page, it's really important to know that whenever someone reaches the checkout payment page, most likely he already has intention to pay. He already knows he wants to pay. And then for him, it will be convenient just to go for one or other option. But we are not really getting the most of the BNPL as a marketing tool. We're not attracting more people to the checkout, because we are not showing it at the beginning. So it is really advisable to do so when using this technology. Let's move to the next one. Yeah.
All right. So with that, we'll get into some Q&A. Go ahead, Kiko.
Yeah, sorry. So we have Darren with us from Etsy, and I think it's time for having a nice discussion. I think we can start it with what's the origin. So where did it all start? Where did it, like the idea of using BNPL at Etsy landed with you, Darren? Can you explain us the origins?
Yeah, sure thing. Thanks, Kiko, for the introduction. So I think at Etsy we take a differentiated approach to payments and buyer payment methods. So that is, we look at it at a country-specific level, and we think it's very important to do that because there's a vast array of payment methods out there, and they differ vastly. If you look at the EU, for example, which is pretty close economically tied group of countries, there's a vast array of different buyer payment methods per country. There's also, which I think is important, very important, different buyer attitudes towards payment methods and preferences per country. So that's what we do. We look at it on a country level, and then with that in mind, with all of that in mind, we identified buy now, pay later as a payment method with rapid growth and with rapid adoption that was in our core markets, being the US and in Europe. And I suppose we obviously wanted to go that little bit further, which is to remain relevant, particularly at checkout. And I think that is key. Being that relevant payment method at checkout will just optimize conversion. And all fingers pointed at buy now, pay later.
Cool. That's great. Thanks, Darren. You talked a little bit about looking at it at a country level. You talked about, being able to sort of compete and maybe save the sale is the way that I would categorize what you said. But are there any sort of roles that buy now, pay later plays for you, regardless of market, or maybe in a couple specific markets that you want to talk about?
Yeah, I think it is just going back to this, we're remaining relevant at checkout, and particularly for that demographic, which is Generation Z. Like, this is being shown that this is the preferred payment method, or at least a very quick, it's growing, very, very rapid adoption for them. So in a summary, Josh, it's about remaining relevant, and that helps them access, which is what it's all about at checkout.
Yeah, it sounds like it's a key demographic for you there. So then when you were selecting a buy now, pay later partner, what were some of the key considerations that you were considering when you were comparing those that are playing in the market?
Yeah, sure. Look, as a merchant, pricing is always key. And Etsy's a marketplace, so we're not your traditional type of retailer. So protecting margins is very, very important for us. So yeah, I'd easily say that was a key consideration. Another key consideration for sure is integration. And the way we looked at that was, could we integrate with an existing PSP? And obviously that's why I'm on the call here with you guys today, because we have a great relationship with Adyen. And that's the route that we decided to integrate with. And there's so many benefits for that. There's like accounting, reporting, and obviously relationship management. That's already integrated into our systems. And I wouldn't necessarily say it's a flick of a switch, but it is at that end of the spectrum when it comes to integration. So yeah, that was pretty key for us. The other one, which was related to what Kiko was talking about, the science or the data, and that's the approval rates. Because if you're going to put a customer or a buyer through that funnel, so through all that pain, you want to make sure that she gets approved at the other end. So that was a key consideration for us, and definitely something that I would like to flag to any merchant out there, to look for approval rates. That's pretty important. And then also, which is probably unique to someone like Etsy, in that, so we're the marketplace, but we've got a vast array of different ticket volumes or ticket values. So we've got items that sell for $50, and we've got items that sell for a couple of $1,000. And not all buy now, pay later products are suitable for every single ticket value. So with that in mind, we identified a partner, which is Klarna, and they are able to target for a certain product, whether it's APR facing for the buyer or if it's free, the term length, depending on the actual ticket value. So I think that's a key consideration for sure. And yeah, I think the last one, which for us was pretty important, because at Etsy, it's all about keeping commerce human. It's all about being fair to the buyer and to the seller. And that is late fees. So we wanted to make sure that late fees were kept to an absolute minimum, particularly if you have that lower value. It can, like a $10 late fee or $5 late fee, that can considerably then just quickly add up. So for us, they were the key considerations.
Cool. I guess I'm gonna be the one bringing the golden question. So, how does the future look like for Etsy in the BNPL realm?
Yeah, sure. Well, we just launched with Klarna earlier this week, so we're just in the middle of ramping, and we'll be officially launched on Monday. So that's going really well. That was in the US. So the future is to expand throughout Europe, so with Klarna, and into Australia as well next year.
Cool, great, thanks, Darren. Like super exciting adventure we're getting into. So really happy to be part of the journey.
Yeah, for sure, Kiko.
Cool, great. So well, I think with all what you were saying and what we're trying here to say as well is that basically BNPL has a momentum. The time is now, and the amount of providers and players that we have out there is huge, is big. So with that in mind, yeah, and actually some of those providers have a more local approach. Like we can see their PayBright in Canada, but others have a really global approach, like Klarna or Afterpay, as we were mentioning before. So I think what is clear, a no-brainer, is that the variety is huge, and that is super positive. That brings a lot of benefits to merchants, because I believe that gives you, as a merchant, the option to pick the product that better suits your use cases in each and every market where you want to be present. But at the same time, I also think that it also brings some complexity, because each and every one of those payment methods will make you have one single integration and all the hassle or all the operational hassle that can come with that. So, and in Adyen, as a PSP, we think that by having that integration through us, we basically are able to resolve all that operational hassle, to give you a quicker time to market, and having a standard solution by resolving a single point of integration, one unique integration, then a standard reconciliation process and post-transaction processes. So basically with those three, plus the time to market, we believe that the approach toward this really crowded and fragmented landscape is way smoother when you do it via a PSP. Maybe so in that yeah, thanks. So in that line, I wanted to show in this slide that we are going towards expanding our coverage. Right now, as October 2020, we are connected to 8 providers covering 16 countries, and is our aim by 2021 to be closer to the 20 countries. So our coverage will be expanded in the coming quarters. And going to a deep dive into North America, because I think most of you will be present there. Yeah, those are the four main providers that we offer. So being Klarna and Afterpay specific in the US, and having Afterpay and PayBright locally in Canada, and Afterpay in the US and Canada. You can see there some specificities and characteristics of each payment method there. So we will be sharing these slides anyways after this session.
Great. Thanks, Kiko. So just to drive home some of the points that we've made today, buy now, pay later is more than a payment method. We've said that over and over. It's also a convenient marketing tool, but it really requires a holistic integration, both with directly with the payment method or through Adyen, and that those sorts of as low as messages always require that you integrate with the partner to get the most mileage out of a buy now, pay later partner. And then finally, PSPs, do offer a lot of speed and efficiencies, so that you can have the right buy now, pay later partner in the right market and have the least amount of lift, maintenance, and reconciliation hassle. So with that, I think we've got about 10, 11 minutes left. We can go to questions.
Yeah, and guys, thanks a lot for the great presentation. Really cool insights. We already get some questions here from people in the chat, and I'm going to let Daniel on to ask this question himself. There
Am
we
I
go.
live? All right.
Yes. Hey, Daniel.
Hi. Thank you. I definitely agree with everyone in the sense that buy now, pay later is now the method of payment for new generation. Thank you for your input. I'm interested to, I know pretty much all the benefits, but as a merchant, I'm interested to find out how the liability works and refunds and stuff like that. Do they vary per provider? What was your decision making perspective on that through Etsy? I mean, I think I know how it works, but I just want to kind of get confirmation.
Yeah, sure thing, Daniel. What merchant are you with, by the way?
I'm with Medieval Time. It's a dinner show. It's ticket sales.
Oh, gotcha, cool. Yeah, sure. So liability rests with our partner, so that's Klarna. So there's no risk to Etsy for non-payment by the seller. Non-payment by the buyer. So Etsy gets paid upfront in advance, so we get all the money whenever at capture, and then that's it. If the buyer fails to make repayment, neither the seller on Etsy nor Etsy has to step in.
And I think I can add that it extends to all providers. So it is basically a key factor for all providers. So shopper risk always stay with the BNPL provider in this case.
Okay.
Yeah, I'll just add on to that quickly, though, that of course there has to be a recourse for the customer when services or merchandise aren't fulfilled or they're satisfied with it. So you do see disputes with buy now, pay later in those instances, but when fraud and when there's a liability shift for fraud, that certainly reduces the dispute rate.
I think the way they basically do it, they have some rules, some scheme rules or some payment method rules that the merchant needs to comply with. Mostly are shipping policies, and if they're if a transaction is not compliant to those, then the buy now pay later provider or payment method has the option to charge back the transaction.
Yeah. Okay. That makes it more palatable in that sense. Yeah, we don't deal with shipping. I mean, we're ticketing. We're service oriented customer merchants. So I do get that idea of, hey, I'm not satisfied with the service provided, and so I worry that they don't know who to go to. Do they go to the merchant for the refund, or do they go to Klarna for a refund?
Yeah. So
that's the confusion.
Yeah, so the customer is actually a customer of you, but also a customer of Klarna's, and they have their own customer service. So shoppers can reach out there. It is true that for ticketing and digital goods, the setup can vary a little bit because, as you say, there's no shipping happening. But in all those cases, basically all these providers, all of them already offer their services, and they have clear policies on how it will work for digital content.
Okay, thank you. I appreciate that.
Sure.
Thank you, Daniel. So I have one more question here that I saw earlier that came from Jacob, and he's asking, do consumers see buy now, pay later service as a commodity? So I think he wants to get into brand recognition. So do customers or shoppers actually have a preference for a specific brand?
I can start with that one, and then maybe be great to hear Kiko and Darren's thoughts. I definitely think that you do see a network effect in certain verticals, in certain brand cohorts, where one of the players has penetrated that cohort well, and you're certainly going to see attrition when creating a new account is required. And so I don't think it's quite either. It's not just a commodity, and it's not a very loyal brand experience, but certainly you do have customers that have picked their buy now, pay later partner because that was the first one they were introduced to. And so that network effect should be a consideration when you're choosing one.
And that particular retention of customers is also beneficial for the BNPL provider, for the payment method, because as soon as they know you and they know that you pay, so basically they understand your behavior better and they will convert better on you. So yeah, definitely not a commodity, but as Josie is saying, is a little bit balanced. I think it's also important to note that the big brands out there, like Klarna, Afterpay, they're making big efforts to make sure that their brand is recognized and that shoppers basically trust them and pick them whenever they're shown in the checkout.
Yeah, I completely agree. I definitely think it is not a commodity. I would actually say it's very different. It's definitely a marketing channel as much as it is a payment method, and that brand is strong. And I think Klarna, you may not have seen it, but they're obviously going out with a big advertisement push. So yeah, I totally agree. It's not a commodity.
Yeah, I can suggest here you check on YouTube like Klarna, Snoop Dogg, and enjoy the ride.
I wondered how far we would make it before Snoop Dogg came up.
Sorry, I had to do it.
Cool. Thank you guys for that one. I have one more question here that came from Nikita, and also Rohit is like leaning into the same direction. And Darren, it's a question to you about the cost of buy now, pay later. So usually they're more expensive than other payment methods, for example, credit cards. So does Etsy charge their seller more for buy now, pay later payment methods?
No, so with Etsy Payments, so when a seller signs up to Etsy Payments, she pays a standard fee. That's all available on our website, easy to find. And no, so we don't charge an additional fee to the seller.
Perfect, thank you for that. And then another question from the chat, and this is around, probably a question a lot of people have around B2B digital sales and how this is right now or might in the future be covered by buy now, pay later. Are there any limitations for B2B sellers?
Yeah, go ahead, Josh.
That's going to vary by provider, and these providers have their own sort of scheme rules, as Kiko alluded to earlier, where they have certain purchases and certain businesses they're willing to underwrite and others that they're not, but it's really the prerogative of the partner.
Perfect, thank you. And then I have a question myself, if that's okay. Just in general, and maybe that's a good one also for Darren, like the option of offering more than one buy now, pay later payment method in the checkout. Is it something that you considered, like from your perspective for Etsy, and then maybe Josh and Kiko can go into what they see on the broader range of Adyen merchants?
Yeah, for sure, Hannes. This is something that we consider, and it's something that we test for. We just reiterate, experiment the whole time. So we've opted for a threshold below which we offer the installment payment method. So that's over a shorter period of time. So any orders below $250 and down to $50, a buyer can pay back over the course of every 2 weeks, and she makes 4 payments altogether. And then the other option is for that higher ticket, so $250 up to $10,000. And that's then when Klarna's financing product comes in. So that comes with a buyer-facing APR. But that's something that we're going to test for. So where that threshold begins and ends, or even put them side by side. So let the buyer decide which ones she wants to use. So yeah, for sure, it's something that we think about the whole time. And obviously, the whole idea is just to optimize conversion. So we will test whichever one optimizes conversion.
I think that's a great point. I think that the testing of it is the best case scenario. If you have the ability to do a bake-off or a test where you can see which one performs best, that's probably what's going to be most advantageous to the merchant. But you have to consider that whenever you're introducing any new payment method, you may be causing attrition or lack of conversion because of introduced choice. So I think that payments personalization and using what you know about that customer to either prioritize or suppress certain payment methods based on which ones you think are most likely to resonate with them is what's going to be best. But I've not seen a lot of sites with more than one buy now, pay later option. The exception being PayPal, because of course they have PayPal credit buried in their flow, but usually they've picked one. And that could be for a few reasons, including the integration effort.
And that is pretty aligned to Europe, actually. So Europe, a little bit more mature market. It's also not common to have several providers at the same time in the checkout. So usually you like merchants go for one. Some providers have different options, as Darren is saying. So pay in for end financing from the same provider. So those could be seen both as BNPL, but it's actually a slightly different product. But it's a common, I think the common case or the common use is to have one provider. Although I agree on the testing, of course.
Yeah.
There's one question I've seen here in the chat that I just want to make sure that we address. There seems to maybe be a thought that you would, as the merchant, be accepting more frequent payments. That's actually not the case with the ones that we've mentioned today. There are some smaller players in Europe that play that way, but not the ones in North America. The merchant is going to be settled in a normal T plus 2 to 5 days, depending on the partner, the net amount of the sale. So net fees. There would not be, you would not be receiving a new payment every 2 weeks as the merchant. That is the responsibility of the partner. And so then there was a question about the fees as well, and that's going to vary by the partner. Some, there's only the merchant discount rate, which is the fee, and others have a hybrid model where the fee is partially borne by the merchant and partially borne by the customer. And usually when the customer has an APR associated, that is for longer term financing, so something beyond 60 days or 2 months.
All right, thanks, Josh. We are basically at time, guys. I want to just finish up with one question to Darren, just your thoughts on this, because I know a lot of merchants have this on their minds when it comes to adding in new payment methods and actually the fear of cannibalization of existing payment methods. Like how was your thought process before adding a buy now, pay later payment method?
Yeah, cannibalization, it's an awful thing, isn't it? It's something definitely that we are concerned about. But we actually think it is such a vastly different payment method to everything else that we traditionally offer that we actually do not believe it's there. Now, we're testing for this. We're going to monitor this. But yeah, we don't think we'll see much cannibalization. We actually think it's going to be the opposite. It's going to drive conversion. It's going to drive average order value. It's going to drive people to our site. So that's how we've been thinking about it. Perfect.
Thank you very much. Thanks, Darren, Josh, Kiko. Really insightful. And for everybody in the chat, thanks for listening in. We are closing this room now, so feel free to hop over to another session. If you still want to see what's on the agenda, just move over to the reception.
Yeah, and thanks to my partners here. They're all in Europe and burning the midnight oil with me, so really appreciate the time and effort. Thanks so much.
Thanks, everyone.
Sure, thank you. Bye-bye.
Thank you, guys.